I'm Steph, and today I'm going to be presenting Master Your Pricing. So this is an extremely important topic and we should get right into it. Let's go. Okay, so we've got the Master Your Pricing specifically targeted for people within the beauty industry. It is a model that can be used across all service-based industries that actually use a product to perform the service. So we will be covering here basically the price per service formula. And in that, we've got our individual hourly rate. We have our OPEX or our operating expenditure rate for that particular hour. When we have that information, we are then able to multiply that by our time per service. And from there, we can calculate the estimated direct costs separately, add all of that up, multiply it by our profit margin, and there we go. We've got a price per service to direct how we should actually be pricing our services. So moving along, what we will be covering in this is to understand the costs that are involved in running a salon. Then we will learn how to calculate the actual price per service, and we will be discussing the break even that we need to reach in order to pay ourselves as well as cover all of our business costs before we see that profit. Okay, moving on. Here we've got the critical importance of strategic pricing. Now this is important because you need to ask yourself, is this an actual business or is this just a very expensive hobby? Then we need to also understand that our competitors do not define our prices indefinitely. It's a metric that we need to be aware of. We have to know what our competitors are charging, but we cannot be stuck on only pricing per competitor. So they doing this, we doing that. And the reason for that is because we are not selling a standardized product. So we cannot compare apples with apples, so to speak. What we are selling is a service that has skill attached to it, that requires product to be performed, and that lasts for a specific amount of period. So it is not a product versus product with exactly the same manufacturing standards. That is why we cannot go off of competitor price alone. We then also need to take into account that our price needs to account for our expenses, our labor cost, any future emergency cost that might occur in the business. If we don't, the business is not scalable, the business is not sellable, the business might not be making a profit. And again, it comes back to, is it an actual business or are we doing this just as a very expensive hobby? So moving along from this, here we've got understanding the 4 basic types of costs. So before you get into something, you are going to look at what is it going to cost me to start this business, right? Those are your one-time expenses. We then have what is it going to cost me to actually run this business day to day. And then we have our direct material cost. So in this example where we are providing a service and the service might need nail product or it might need waxing or it might need makeup product, we have a direct product cost attached to providing that service. We then also have our service provider costs. So this is the labor that is directly involved in providing those costs. From there, we will just have a brief look at what are our startup business costs. So in the startup business costs, we do an estimated cost analysis. Again, keyword, this is estimated, right? So we need to find out what is our education and training going to cost us, right? That is to acquire the actual skills that we need to provide this service. We also need to keep in mind training in first aid. When you are working with people, you need to understand that things could happen, unforeseeable circumstances could happen. And in that event, if there's a chemical burn, for example, we need to know how to correctly handle that. So it's always wise to set aside a certain amount for those particular types of costs. Then your premises. Is this going to be home-based? Is this going to be based at a commercial site? What is that rental going to look like? What are those utilities going to look like? Internet and so forth. We then have a Find Your Feet fund, where this is going to help you get onto your feet while you are building up a client base. And of course, an emergency fund, because we all know that business interruption can happen. Emergency funds are very important if you are the sole service provider for your business. If you don't work, you don't render the service, you don't make an income. So it's very important that you've got finances set aside for those days when emergencies happen. Moving along, our first aspect is to look at our service cost per hour. This is made up of 3 basic categories. Okay, we have our operating expenses per hour plus our individual labor rate per hour. Then we've got the direct material cost involved in performing that service. And then we have how much of time does the service take to complete. Very important. Right. Okay, there we go. So this is the basic formula that we will use. We will be looking at what is the price that we need to charge for this service. And that will be, we take our individual rate per hour. We're going to go through that calculation soon. Plus our operational cost or expense for that hour. And that is going to give us our service cost per hour. We will take that particular answer and then it needs to be multiplied by the amount of time taken. We're going to go through a practical example. All of this is going to make sense soon. That answer that we get there will come down here and it will be added to our direct material costs. Again, something that's got to be calculated separately. We will then take that answer and it has to be added to the profit percentage per service. So this is your markup, or if you were to calculate a separate margin, profit margin. But this has to first be calculated, so that percentage, right, off of that amount, and then the two are added. So you're going to take that answer plus what we've calculated as your profit markup, and that is going to give you your price per service. So this is a basic formula table. What I have here, so before we get into this, is with this particular course, if you would like to purchase the actual table that contains all of the different formulas where it automatically is going to calculate stuff for you, then that will be in a separate worksheet, right? For this particular one, these are static. You cannot change numbers. It's not going to calculate anything for you. This is for our case study or our particular example. Now, our example consists of a 29-year-old nail technician performing one acrylic service, that is tips, right? And with this particular service, she has a certain amount of operating expenses and a certain amount of salary that she wants to get paid at the end of that particular month. And so we are going to use that case study for our specific example. Getting into this is the total table that is going to tell us our price per formula, right? Our price per service. So in this particular table over here, what we have is we will first determine our monthly earning. What does this person want to earn per month? Remember, this is either going to be for yourself or per staff member, right? Performing this particular service. And then we have how many working hours are we allocating for that particular month. Right, back to this. Now we're going to have this category or block over here, which is going to help us determine our individual hourly rate. Then we will have the next block that will help us determine our operating expenses and that hourly rate. We will get a service cost per hour. where we will then multiply that by how long that service actually takes, and then we will add that to our direct material cost. That is going to give us our total service cost for that specific type of service for that specific amount of time. And then we're going to add on our percentage or our markup, our profit. From there, we will get a margin. That margin is added on, and that is going to give us our allocated total price to charge. So let's break this table down a bit further. Over here, this is a visual representation of what our particular case study or example for this is going to look like. So we know that there's one service provider who's 29 years of age who wants to make that take-home pay in a 20-day cycle or 160 hours of work. We know that we will go through this worksheet where I show you how we got to this figure here of her operating expenses, and then we have her monthly expenses plus her emergency fund gives us that total operating expenses, and everything else is broken down simply there. So what is the first portion? Your individual hourly rate. So firstly, you've got to determine what is that person going to be paid for that month. Is it 5,000 Rand? Is it 15,000 Rand? Is it 20,000 Rand? And this is take home, right? So after tax, we're going to start with take home pay. Once that figure has been established, and it's got to be realistic and realizable, especially for that type of industry and expertise that is being provided, right? We are then going to look at, this is my suggestion on how we should allocate the money that we take home. So we can allocate about this amount to our living expenditure. We should allocate a good portion to retirement investments, because as a person who is self-employed, if you are not employed by a conglomerate, so even if you're working for a salon, chances are you do not have a retirement annuity fund or medical aid, and that's going to be on yourself, or that's your own responsibility to see to. So this is what we're going to look at, right? Put aside a percentage for yourself, right? Then we're going to have savings, very, very, very important. And then medical emergencies and money for any type of entertainment or spoils for that particular month. So that's just a suggestion for you. Moving along, we come to our individual hourly rate. Step 1, define your monthly target income. How much do you want to take home? This is the amount in our example. We're just going to call it 20,000 rands. Okay. Estimate how many working hours you have available to make that money. So this is a standard 5 days per week, 8 hours per day, 160 hours within a month. Okay. Step 3, calculate your base hourly rate. So we're going to take the amount that we want to take home or earn divided by the amount of hours that we actually want to put into making that type of money, and it's going to give us that amount of 125 rands and 50 cents. For simplicity, I'm going to round off our figures, right? The next step is crucial, because oftentimes we do not talk about income tax or pay as you earn tax, and this is very important. If you are an employee, even if it's for your own business, if you are getting paid a salary within your business, you need to pay income tax. So any income earned within the Republic of South Africa, you've got to pay tax on, right? Firstly, we are going to calculate our base hourly rate, which we did on top. Then that's going to help us determine our tax bracket, right? So if our take-home pay is about 20,000 Rand, we are going to fall into a particular tax bracket, which will be the second tax bracket. Now, tax gets slightly complex. It's good to have an accountant or a tax practitioner assist you with this. This is not tax advice. I am not an accountant. I am not a tax practitioner. Please note. Okay, but what I do have in that spreadsheet is a plug and play system where you put in your figures and it's going to calculate your actual tax that is payable. My suggestion is, even though in South Africa we do have a threshold, which means up to that amount you're not going to pay tax on, and we do have rebates, and you will fall into a particular rebate based on the categories, those reduce your tax liability. However, I think it's prudent to rather use whatever category you fall into, calculate that tax on your hourly rate, add it into your service, pay that monthly as an employee, or if you are self-employed, provisionally twice a year. So when you come to the end of that financial year and you have to now reconcile and get all of your things in order and do your e-filing with SARS, what is going to happen is you might have overpaid because you have not taken into account the tax threshold or the rebate that applies to you. So you might actually get money back at the end of that period. And that's important. It's better to rather put more in so that there might be an expectation of some cash coming out versus miscalculating and underpaying on your tax, and then you've got a lump sum that is due at the end of that tax period. Okay, so moving along, we will determine our tax bracket. So a tax bracket is fairly simple. It works with between this amount to this amount for that particular year. If that was your amount that you earned in total, so your gross salary, then you would fall into a particular bracket, okay? And then it's just deducted per section. So in our example, this person falls into the second tax bracket, which is 26%. I'm not going to get too technical on the deductions, right? That is included in the actual spreadsheet. So, for example, 125.50 per hour by 26% of tax, rounded off is 33 rands. So what we do is we take that 125 base hourly rate that we want to take home plus that 26% tax bracket, which of course will have deductions on it. Don't make it complicated. Add it in. And then on our table over here, we've got a section for our service cost per hour. So that amounts to 158 rands, first part. Okay, let's move on. Then we move on to calculating our operating expenses per hour. For ease of use, I'm just going to say OPEX moving forward, right? You get fixed and you get variable costs. You can take a screenshot. These are a few examples. A variable will have changing amounts. Fixed is obviously fixed for that particular period or month. And then we will also have seasonal variable costs. So these could be equipment upgrades, renovations, marketing campaigns for particular seasons, like Mother's Day, Valentine's, Christmas, whatever, right? But we've got to be prudent and we've got to set aside some cash for this. Okay. This is broken down, or this calculation is broken down into this table over here. So in this particular table, we've got here our category, a subcategory which explains it further, whether it is a very fixed cost variable or a seasonal one, and we're going to get our total amount. This is obviously just for an example. If you do get the sheet with all of these already put on, you can edit it, customize it, change it up. Formulas will calculate your totals for you, right? So this is our example. We then added a 10% as an emergency fund, and this is going to be our total operating expenses for that month, right? Now that we've got that figure for the month, where we've calculated it here, that's our month plus emergency fund, that's our total. We need it per hour. So remember, how many hours are we working? 160 in this example. So for 160 hours is divided into that, and we get approximately 95 rands per hour of operating expenses. Okay, now that we have got our individual hourly rate, we are going to add it to our operating expense per hour for that a particular period of time, right? So those are going to go nicely into our formula. So there we've got the 2, gives us 253 rands, and that is going to give us our service cost per hour. Okay, that's our first section done. Service cost per hour. Next is, how long is this particular example going to take us? So if you're a makeup artist, pardon me, how long is it going to take you to do that face? If you are an esthetician, how long is that facial going to take? If you perform waxing services, how long is that? Is it 15 minutes, 30? What is it? In our particular example, it's 1.5 hours, right? So calculated here is 1.5. That is where it is sitting within our formula. Moving on to our table, we take our 253 total service cost per hour, multiplied by 1.5 or 1.5 hours, and we are going to get 380 rands. Okay, so our service cost multiplied by our time per hour gives us 380 rands. We now need to add on our third category, which is our direct material cost for that particular service. In our direct material cost for the service, here is another basic table, and within this we've got the service is acrylic. It has tips, right? So that was for the extension, and this is what is included. Now, this is fairly important because without this, you're never going to have a direct cost. And then when we ask, but Steph, doesn't this vary? I mean, how can you work on absolutes? You cannot work on absolutes in this particular case. What is going to happen is you are going to work on a rule of averages. So you will start off with a stock list. Okay, if I'm going to perform this service, these are the line items that I need. The direct items, the consumables, the hygiene equipment. This is all that I need to perform that particular service. So in these columns here, we will have the actual items. Okay, so we've got the quantity of the item and how much it had costed us. So a 30 gram of plain nude acrylic powder in this example costed 150 rand. Okay, then we need to figure out what does it actually cost me in the service? How much of this product am I using? And this is where the averages come into play. My suggestion is the supplier that you are buying your product from or the product house, give them a call and ask them, okay guys, for this particular amount of product on a standard set, how much does this or how many sets can this jar or tube or bottle, how many sets approximately plus minus can I get out of this? And they should be able to give you an approximation. Remember, it's going to depend on how much you use, how much of wastage there is, how long that actual nail is, or whether it's the leg or whatever it is that you're doing. So it's very difficult to do it gram for gram or milliliter for milliliter, but we can use an average. Okay, so in our particular case, this is 5 grams of an acrylic powder will be for this particular service to complete 10 fingernails, right? Then we ask, okay, how much is that in a rand amount, right? What is it going to cost us? And it's in my table that I've got on the sheet, it automatically calculates this for you. So for example, if the jar is 30 grams of product, that costed us a total of 150 rands, and we are only using 5 grams of product for that service, we are then going to have the grammage used. And what this will do is it will be this amount here of how much it costed us divided by the grammage, and then we're actually going to get how much it's costing us per gram, right? And then there's a multiplication done per gram, and we come to 25 rands. So here we've got an estimation on acrylic liquid, each tip, how much that had costed us, 2 rands per tip, right? Sanitizer, top coat, primer. This particular case had 2 nails of art, and then a total amount for disposable. So that's your mask, that's your gloves, that's your nail file, that's your buffer, right? That was put in here. When you want to customize this for yourself, you are more than welcome to get the sheet so that you can edit it and you can add in your own categories and you can put your stock item lists and you can put how much those stock items cost for that total item and you can break it down. So again, first we're going to have the total product. How much does it weigh in milliliters or grams? Then we're going to have the price of that. After that, we're going to say how much of it do we use for that service, that quantity, and then we're going to divide that into the total quantity and we're going to then get a cost. When we have this cost over here, we can multiply that cost by how much we've used and we will have the cost for that service. Right? So again, static, this does not allow you to change it. This is just for examples, an example purpose, right? So there, direct materials, we have 79.98. Okay, we are going to round that off. What's also important on this, for every single service that you provide, and I understand, I know this is time consuming, so you have options. You can do it yourself. For all of your services, put in the work initially. You can get a cost accountant in, right, to consult with you and do it. You can work with a business consultant like myself. It's all dependent on what your time and your budget allow. You have to have a sheet like this broken down for every single service that you offer, because this is going to help you see how your costs change over the year, what percentage price increase there's been on the products that you're buying, whether you've got to change your supplier. It's going to determine how much you're going to increase your prices by for the next year and the following year. It's also going to help you see on average how much do you use per client. If you've got staff, are they wasting? Is there stealing? This gives you a handle on your direct material. It's very important, okay? In this example I've got here, it's going to take us a total of 10 products. Their full quantity is going to cost us 1,300 Rand, right? But we are going to use 80 Rands. That's what it's going to cost us per service. And if you take that 80 Rand into that 1,300, it will tell you that there's plus minus 16 services that you can get from all of those products collectively. So again, this is going to help you with all of your metrics. Okay. Moving on, this is exactly step by step what you're going to follow in order to calculate your direct material. Okay, so we've got the spreadsheet, direct material per service, create a subfolder for each type of service that you offer, right? Break down your averages that you use, contact your supplier for that information, and then that's our example. And within our formulation, this is where our direct material is going to be put in. On our table, we've got our 80 Rands there. Moving on, we will have to determine the profit markup. Guys, please don't make the mistake of thinking that markup and margin are the same. They are not the same. There is a price difference or a percentage difference in them. So if you would like more information on that, if you want to be very technical about it and know your margins, I can help you out with that. Just reach out. Okay. Yeah, set a profit markup to ensure that your business remains sustainable because you want to grow, right? This is the industry norm, normally 20 to 50%. It depends on you. You can determine this figure, right? And then there's, of course, different types of profit. Gross profit is your cost of goods sold or your cost of services, less your direct labor, and then you're going to get your gross profit. Okay, then you will have your operating profit, which is that gross profit, and you you subtract your operating expenses, and then you will have net profit. Net profit is going to be the amount left after you've taken gross minus all of your expenses. You add any other additional income in. So if you've retailed products, you would add that amount in, and then you would come to your net profit before tax. So if you are a sole proprietor, you are going to be taxed within your individual capacity. The amount of money that your business makes is going to be seen as completely yours. So you are going to be taxed on that total amount. The benefit of this is that you get to subtract business expenses before you are actually taxed. If you are paying yourself a salary as an employee, you will be taxed on that total salary first. You do not get to deduct any expenses from that, so you would end up being taxed more. There are different benefits and disadvantages for either being taxed as an employee, taxed as a sole proprietor or self-employed, or taxed as a business owner with a salary, or someone who takes drawings or dividends, right? So we can get into that. You can contact me and we can talk more about that. In this particular example, our case study is going to be best, not served, but she's going to basically decrease her tax liability by being a self-employed individual, okay? So net profit before tax, then you have to subtract the amount that's got to go to SARS, and then you get net profit after your tax. So when you have net profit after tax, you've got to be wise about how you want to take that money and what you want to do with that money. Oftentimes, we want to reinvest back into the business. We then have to allocate for company tax if you've got a private company that you've registered with CIPC. If you are self-employed, this tax rate is obviously going to be different. And then here we've got the owner's compensation. So if you want to pay yourself a capital gain or you want a dividend, right? That is your reward for being the owner, for putting up front all of these costs and for starting this particular business. You can choose to reinvest it back into your business so that you are not taxed on it, or you can defer that payment to you so that you are not taxed on that. But very important is to continuously reinvest into your business. In our table, this would be the final result. So we would have a section for cost per hour added to our profit will give us our actual price. Broken down, that is service cost per hour multiplied by the time for that service plus our direct material. And that is going to give us an answer over there of 460 Rand of cost per service. We want to add on a 30% markup, which will come out to 138 Rands, giving us a total price of 598 Rand, rounded off to about 600 bucks. So on our first table that we had here with our costing, I want to show it to you here. Right. We had our individual rate calculated, operating expense per hour, time, direct material, profit, margin. You will notice this percentage here. Even though we added a 30% markup, the actual margin that we are making on this particular service is only 23%. So that's 7 percentage points down. It's important to understand this because in your mind, if you're telling yourself, okay, my profit margin is 30%, it's not. That's your markup, not your margin. Okay. What is important here is if you say, okay, Steph, now I've got my service price, more or less, I've got to look at my competition. What's going to affect this price is going to be your skill level, the amount of time it takes you to perform that service, the value you add into your client, where you are based, location does count, and of course your competitors. What I will say here is if you feel that this amount is just a bit too high, the only place you can look at reducing this amount is going to be, are you able to reduce your operating expenses? Are you able to reduce your profit markup? Then, are you able to take home less money at the end of the month? Then you can bring that cost down. Okay? If you are going to work for less hours, it's actually going to increase this cost because you are going to have less hours to divide into your formula. So you've got to keep that in mind. With this example, this person is only working for 5 days a week for 8 hours per day. We do understand that in this particular type of situation, that's not always how it works. You can run over with clients, they come late, you have peak seasons. This is just a baseline indication to get to that cost. That price that you are going to charge must cover your labor or your staff's labor, your expenses to run your business, as well as profit. We do not get into business so that we can just have a hobby. That's separate. We get into business to generate a profit. That is the reward for all of the challenge, the risk, the time, the energy, the effort that it takes to run a business. If you want to be a nonprofit, you cannot be in the beauty industry, right? One thing I would like to point out is that when you have all of this calculated in the particular sheet that I've got, so it's an Excel spreadsheet, it will also have a section to break down, okay, Steph, so this is my price. How much or how many services do I need to perform in order to break even on my salary, to break even on my operating expenses for the month? How many people do I need to see to in order to know, okay, sure, I've seen this minimum amount of people, I've charged them this amount, and okay, I'm sorted for the month. I can make my rent, I can make my salary, I can pay my taxes, everything is sorted. That is included in that sheet. And for this particular example, it works out to an average of 88 clients in order to cover all of our expenses. After those 88 clients, I would know that I was able to restock on my product, I was able to pay myself, and I was able to see to my business's expenses. And then any person over 88 people would say, okay, Steph, now we're in the range of making a profit. This is our over and above, and that's good. And you've got to know your metric, because if you do not have a targeted amount of people, you are not going to adjust your marketing accordingly. You're not going to adjust the way that you go into business accordingly. You're not going to know whether you're making it at the end of that month. So we love being creative. We love dealing and working with different types of people, but this is a business. And if you want it to be successful, or one day you want to be able to have an exit strategy and to sell your business off and know that it's actually sellable, you have to have paperwork. And this is one part in helping you achieve that. I hope that you found this valuable. It's taken a lot of effort to put this together for you. I wish that I had had this breakdown when I had started in this industry, but I hope that it's super, super, super helpful for you. If you found this valuable, and if you have any questions, you can always message me in the comments. You can direct message me on WhatsApp. I will respond quickest on that platform. But if you have any needs more than this, if you want to consult with me, then you can book a session on my website or with me by scanning this code on WhatsApp. Thank you guys for your time. Take care. Stay blessed.